MarketStrategy.com.
Hi, it's Chris again, looking at the upcoming Thursday, September 4th trading session. In front of you, I have the economic calendar, and to be quite honest with you, there's really only about three things you need to be paying attention to for this particular session. I will get out of the way, though. There is a BOJ press conference after an announcement late on Wednesday, but really the Bank of Japan is very loose monetary policy-wise. Everybody knows that. I don't expect much of a change. Really, what we're paying attention to is the interest rate decision coming out of London, expected to be at 0.5%. Pay attention to the statement, though. Any dovish words could accelerate the downtrend in the pound. However, if the market gets disappointed and it bounces a little bit in the pound dollar, look for selling opportunities on short-term charts. The pound dollar's rally will be short-lived if it does in fact have one. Seems like the market's basically paying attention to Scottish independence votes, and with that, next couple of weeks could be really rough for cable. That being said, we go to the ECB interest rate decision up here and the press conference. Press conference will be paid attention to. Not a lot expected out of the decision, but people are starting to wonder whether or not the ECB will be ahead or behind the curve as far as easing is concerned. With that, it's very likely that the marketplace will parse those words and find a reason to sell the euro dollar. Look for rallies as selling opportunities as well. We still have a target of 1.28 longer term. After that, we have initial jobless claims coming out of the United States, 300,000. Normally a major market moving event, but really with non-farm payroll being the next session, it's probably going to be somewhat limited. We do have ISM, non-manufacturing PMI. Those are important numbers, but not today. This is going to be a little bit different because of the non-farm payroll coming. So with that, let's look at a couple of charts. Starting in the United States, the S&P 500, you can see it's just basically meandering around the 2,000 area. And with that, we look at this market as one that every time it falls should provide a buying opportunity. So if those continuing jobless claims come out a little higher than anticipated, maybe rattle the markets a little bit, we're looking for short-term setups to go to the upside, maybe short-term binaries and the like. We think that the 1990 is a floor in this market right now. This is a chart that is the epitome of an absolutely broken currency. With that being the case, rallies will continue to be shorted in the pound dollar on short-term charts. After that announcement today, I should say, we would anticipate any rally to be short-lived at best. Same thing in the euro dollar. You can see we tried to rally, failed, and then therefore it looks as if the market is going to continue to sell off every time it rallies on short-term charts. We're very bearish because of that. We believe that 1.28 will still be targeted in the longer term. It's not to say that there can't be bounces. Most certainly there can be, but really at this point in time we feel that's a fool's errand to try to buy. And with that, we've taken a look at the Thursday, September 4th trading session.